If you invest and trust yourself, trust what you're going to be doing, trust that you will achieve with your faith will reach you to higher horizons. Now, don't mind about failure, because failure will propel you to success. Every single person who succeeded failed somehow, somewhere. But eventually, because they did not give up, they managed to excel because of persistency. May you persist and continue to enlarge your territories and your visions and dreams come to pass in the name of Jesus. Hallelujah. I've got 4 minutes to wind up. Now, Isaac reopened the wells of his father, and now, because in agriculture subsidies, you need irrigation. So we see the river Nile that comes all the way from Uganda, it goes all the way through Sudan, Egypt, and Ethiopia. Where it originates from, we have not even used it. But you see in Egypt, our own river Nile, which starts from our own country, is helping. It's a desert place. They are using it in, actually, they expanded it. It's almost like a sea or a lake. Why? Because they have utilized the water that is coming from Uganda all the way to Sudan, to Egypt, and they are making agricultural subsidies. They are selling products. Sometimes we buy products from Egypt, coming from our own river, because we did not utilize our own waters, and people are fishing into our own waters. We don't get any revenue from it. Now they are making bigger dams. Ethiopia is making a big dam using River Nile. Egypt is making electrical connection through our own waters. They are getting revenues and subsidies and income, and their GDP growth is growing higher. Why? Because they have invested in something that they thought is productive. And for us, we look at it as just mere water. May God open our eyes of understanding to see opportunities, to begin to see vision helpers, that these men of God that we are bringing, like Brighter Cora, he has told you, he started from scratch. He's always in our office. We talk, we link together, but look at where he is. He's not giving up. Now we are making referrals. That's why I called him to come on board, and he's now come on board. But it's up to you to utilize. Are you going to use the information that he's given you, or you're going to say, that's it. I need somebody to give me a hand. I need somebody to, no, you have to push yourself together. And if you want to stay in the pool of water, push yourself until the angel comes and finds you there. May the Lord open the eyes of understanding, that you begin to see the invisible, touch the intangible, hear the inaudible. Hallelujah. Let us see, Pastor Hope, is our next speaker available?
Yes.
Hallelujah.
Yes, he's already on.
Yeah. So, well, our next speaker, Olu, is already landed. Can we also now put our hands together as we have done for the other? This is Ade now. Pastor Ade is proficient, as I said, in mortgage subsidies. He specializes in that. He started with one property. If he tells you how many property he himself he has, you will hear from his talk and his presentation. Let us put our hands together and welcome the man of the hour to take up the conference to speak to us what God has put in. Spirit is also a Christian and a brother in the Lord. Pastor Ade, Brother Ade, you are welcome.
Thank you, everyone, and good afternoon.
Good afternoon.
I'm pleased to be in your midst today, and I hope may the Lord bless every part of what we've discussed and what you've discussed so far. And may God give us the knowledge and the wisdom to learn how to sow the seed, and the seed that will give us a proper reward. So I'm going to discuss about properties and mortgage with us. And I know I have only about 25 or 30 minutes. And if you have any question, I think I will give the room for question as well. My name is Adelden Adetunji. I'm a IFA in financial advisors, and I've been in the business since 2004. So basically, the company name, our company name is called Right Now Financial Limited, and we are based in Vauxhall, very close to between Vauxhall Station and St. Thomas's Hospitals. That's where our office is based. Properties is a form of investment and is the best out of all the form of investment when you are taking a risk, because the reward, it's unlike when you invest in shares and stock, your money can be wiped away immediately. You can get a high return as well, but you can as well, the risk is quite very high. But when you invest in a property, which we call brick and mortar, you will actually, no matter what, even if we are in the period of recession, you still guarantee that your property is there. And no matter how long it takes, you're still going to get your money, your capital. So it's the best form of investment. So which are we employ us to actually take the advantage, especially the country where we are is the best place where you can invest in the properties. And now, when you want to invest in property, there is two forms of where you can invest. You can either you want to buy outright, which if you have cash, either by way, maybe if we win a lottery or something like that, you can buy cash. That's outright purchase. And the other option is when you apply for mortgage, which we call finance. Mortgage is just a word, but it's another word for mortgage is loan. And another word for the mortgage is what we call secured loan. We have two types of loan. We have what we call personal loan, which I know most of us might have applied for in our bank, maybe by apply for a loan to buy a car or to maybe for home furnishing. That we call it unsecured loan because you can use the money to buy anything. But for the mortgage, we call it secured because the loan is secured on the property that you are buying. And that property, the lender look at that property as a way of assuming you don't fulfill your obligation by not paying your mortgage, pay the loan every month. The bank look at the property as opportunity and say, look, our money is there. We can easily repossess the property and get our money back. So that's why we call it secured loan. Now, if you applied for the loan, which I call another word for it is a mortgage. It's just like in Africa, when you say you mortgage your country, that means we mortgage our country. That means our country is on loan. So that's the word we call mortgage. Now, once you get this mortgage, which we call loan, what you want to know is that how do you pay back the loan? There is two methods of paying back. There is a method of paying back to we call capital and interest payment. And the other option is where you pay interest only. Interest only is you are just servicing the loan, you haven't paid the actual loan that you borrow. So you need to look at the how and what method you're going to use to pay the original loan back because you're only paying the interest. A lot of banks don't want you to apply for interest only anymore because especially when it comes to your residential, the house that you need. Because what they want is because when it comes to your residential, if you are on interest only and the term of the mortgage come to an end, how do you pay back this loan? So that's why most of the banks, they don't like interest only when it comes to residential. But you can still use interest only for buy-to-let properties. So, which is another form of property investment, which I'm going to discuss with us as well. So the other option is capital and interest repayment, which means as you are paying the capital is the actual loan that the bank gave you. and you are paying the interest as well. So we call it capital and interest payment. The year of your mortgage depends on your age. Majority of the bank, they don't want us to borrow the money, extend our retirement age. In this country, retirement age starts from 65. I think they extend it to 67. But we as a broker, we always advise us that, okay, you can have your mortgage up to the age of 70. So if someone is 50 years of age now, that means the term of your mortgage can only be for 20 years. This is applied only to residential mortgage, as I mentioned. So which means in 20 years time, if you are doing a capital and interest repayment, you've paid off your mortgage, you are not owing anybody any money. So as I mentioned earlier, before I go further, we have two types of property investment. We can actually have residential mortgage. Residential mortgage is your home where you live. And in this country, we are all allowed to have a residential mortgage. And when you sell this residential mortgage, maybe in the future, maybe we want to downsize, you don't pay any tax on it. It's tax-free. So that is the good thing about when you have a residential mortgage. The other form of investment, which is actually the buy-to-let, is you are investing on the property. You are actually making money from it. You are getting income. So that's what we call buy-to-let mortgage. And with buy-to-let mortgage, you are allowed to actually have it under the interest-only mortgage. Because it's an investment, you can choose to sell it anytime. So there is no bank will force you that you should do a repayment on when it comes to buy-to-let property. So, but you must, when you have a buy-to-let mortgage, you have to make sure every year you are doing a kind of what we call tax return, because you must actually declare either you make profits or you don't make profit. Because a lot of people actually ignore that. And in the long run, the HMRC might actually send you a letter that why you are making money from this property, you haven't declared it. And a lot of people have been in trouble in the past because they don't declare it. Once you declare it, you might even say you are making 1,000 or 2,000. It doesn't matter to HMRC. But it's very important that every year you need to have an accountant who is going to help you to do what we call tax return. Tax return will be a kind of, if you are employed, they need to actually look at your employed income plus whatever profits you make from the properties. Now, before, maybe if you have any question, just want to tell us that there is an opportunity for first-time buyers in this country. If you haven't got a property, there's what we call help to buy. There's what we call share ownership. And there's many other options that is available to us. A first-time buyer, you don't need to put down more than 5% of the purchase price. But because of the pandemic, which we face in the last few months, most of the lenders don't have 5% anymore. The deposit starts from 10% up to 15%. So as a first-time buyer, the good news for you as a first-time buyer, you don't pay stamp duty at the moment, up to property of 500,000. So you don't pay any stamp duty as a first-time buyer. Existing homeowner, you still have to pay a reduced stamp duty, which is 3% of whatever the purchase price. Because a lot of people always think, oh, there is stamp duty holiday. If you have got a home or you have a property, you still have to pay stamp duty. So you are not exempted, but it's going to be a reduced one for you at the moment. I think another thing I will just let us know, there's help to buy, which is available to first-time buyer. Help to buy is a kind of scheme that the government introduced to assist the first-time buyer. The government give you 20% of the value of the property you want to buy as a first-time buyer. So if you find a property worth 300,000, you can easily get 20% of that as a loan. It's a loan. It's not a free gift. you're going to put the government will give you 20% of 300, which is 60,000 pounds, and which you need to pay back either when you sell the property or when you feel like you want to pay back at your own field. Now, the first 5 years of this Help to Buy loan is interest-free. You don't pay any interest. But if you decide to sell the property or to pay back, even under that 3 years or 5 years, you still have to pay back, not to 20% of 300,000, please. It's going to be the 20% of the new market value. This is the area a lot of people don't always, because if anybody come to me and they say, oh, we want Help to Buy, I always try to discourage them. I say, because Help to Buy is always go with the new build. Secondly, when you want to Help to Buy, if the government gave you borrow 20% of 300,000, which is 60,000, if you want to pay back, assuming that property worth 400,000, you're going to pay back 20% of 400,000, which is 80,000. So it's not, you're not going to, so you see that you are sharing your equity with the government. So this is something that we need to be very careful. There is share ownership option as well, which is available to the first-time buyer. The share ownership is a last resort, which I don't always encourage my client to go for as well, because you are buying share of the property. So maybe the property worth 200,000, you want to buy 50% of that. So you want to get a mortgage for 100,000. So as you are paying the mortgage, you have to be paying the rent as well, because it's a share ownership. So you have the option to buy the remaining share at your own will whenever you approach the management company that I want to buy the remaining share in the property. So these are the things that I think we should know now. Other thing you should know, when you are buying a property, please, when we talk about deposits, say 10% or 15%, there are other small costs that you must be aware of. They need to have a solicitor, which they will charge you. For a non-first-time buyer, you need to be aware there is a stamp duty that you need to be aware of as well. And lastly, I need to tell us about the interest rate. I know the interest rate has gone down to 1% or less than that at the moment, but every bank have got their own rate. We have what we call fixed rate, we have what we call variable rate, and we have what we call tracker rate. I will just tell us about fixed rate. Let's say start with variable rate. Every bank in this country have their own rate. It's their own rate, and the bank have the right to give you their own rate. Now, it's a variable rate, and that rate can change as the bank wish, and they can write you and say our rate has changed. And the word vary means variable. It can change at any time. So a lot of banks will give you option to say, do you want to stay on variable rate, or do you want to go for a fixed rate? A fixed rate can be for 2 years, can be for 3 years, can be for 5 years, can be for 10 years. Well, what the fixed rate means, the bank give you a rate and say, we are giving you 3%. And when they say 2-year fixed, that means within that 2 years, you're going to be paying the same amount. Your monthly payment will not increase at all. So for the first-time buyer, you have a lot of opportunity applied to you. So if you are interested, I'm available at any time. You can get my number through Pastor Hopes. And if you have any question, I think, do I have more time to, I don't want to bug you.
Yes, you have. Yeah, I'm just going actually to refer that session to Pastor George Amoti, who is going to take us through the moderation of asking questions and moderating people and giving them the timing and all that. Over to you, Pastor George Amoti. Sir George Amoti, you are taking.
Hello, our guest. Thank you so much, Ade.
Thank you.
Very clear and precise. I know our people have a lot of questions, and we would like to acknowledge everyone who has joined us for the first time. We welcome you all. We prayed earlier before we started, so God, we are in the presence of God, and we know whatever we are discussing is going to be beneficial to each one of us. And I don't know how much time we have left, Pastor Fred.
We got
How much time?
We are finishing at, we got 1 hour.
Okay, so
now we
can
got 45 minutes from now.
Okay, so we can discuss now, ask questions and everything, and then we wrap it up, right? Okay. So we have heard about the mortgages and the property. Some people have more experience, some don't. And would like to invite questions. If you have any question, just put up your hand. And I'm sure Ade is ready and willing to enlighten us in every area you're not sure of. So any questions, please? Should we take it that everyone has a property?
I have a question, but I didn't want to be the first one, but
Oh, Sister Rosemary, you can always be the first. You're welcome.
yeah, it's to do. What is the criteria for the help to buy? What's the criteria?
Criteria, okay. The criteria for the help to buy is you must not have any existing property at the moment. So indirectly, you must be a first-time buyer. Not always a first-time buyer. I mean, if you've sold your existing property and you haven't got any property, variably depend on lenders. Some might say maybe in the last 5 years or 3 years or 10 years. Every lender have their own criteria, but you must not have any existing property. So that's one of the criteria. The help to buy is only applicable to a new build. So when you want to buy a help to buy property, you have to look for a new built property. And when you're looking for a new build, you have to make sure the builder, which you see, like maybe in your area, you see any property that they are just building, they must have that scheme available in their build, maybe within their company. So it's not every new building that have that scheme, because a builder might not have that scheme. So you will see when you're moving around, they will say, oh, help to buy is available, help to buy. So it must be a new build and you must be a first-time buyer. So that's the criteria most for the help to buy.
So if the mortgage is 300,000, and you said that they only require 15% to put down as deposit, the bank will require 15% minimum.
No, for help to buy, the help to buy scheme, the government will give you a loan up to 20%.
So that can be enough for you to use to buy without using your own money at all.
No, you still have to put down 5%.
Okay.
So altogether, your deposit, the deposit they are expecting from you, including the government assistance, which is 20%, the total deposit they are expecting from you will be 25%. Okay. So for help to buy, you always need 5% of your own money.
Okay.
So the government will give you 20%. So a property of 300,000 you just mentioned, the government will give you 20% loan, which is 60%. You will now put down 5% of that 300,000, which is 15,000. So altogether, your 5% plus the government 20% make up to 25%. So you now approach a bank. So the bank will borrow you 75% of the value of the property.
Thank you so much.
Thank you, Rosemary, for that question. We are looking for more questions. While we are waiting,
I have a question.
Sister Elizabeth, yes.
Yes, please. Yes, I have a question. Of late, I was looking at the comments, or they are talking about the shared ownership, and they're really discouraging people to buy shared ownership. And since I myself, I don't have a property, but being the first time, because of their monies and their terms, sometimes you find it enticing to get a shared ownership. So it's getting confused here. Some people are discouraging it, some people are encouraging it because of the amounts on the shared ownership.
Yeah. I think I might be one of the people that are discouraging as well.
Okay.
Because share ownership is when you go for share ownership, you are not fully in control of that property. So if you want to maybe if you want to do anything, you want to remortgage, you need to get permission from the other party, because you are not fully in control of the ownership. And another thing I don't like about the share ownership is, like, if you got a property of 300,000, you are buying 50%, so which means your share is 50%, 150,000. Most of the share ownership give you the option to buy the remaining share in the future. So you can buy it. So assuming you wait till maybe another 5 years before you decide to buy the remaining share, that property might have gone on worth 400,000.
Oh.
Remember that when you bought it, you bought 50%, which is 150. Now, if you are now planning to buy remaining 50%, then we base the remaining 50% on the current market value, which means you're going to buy the remaining 50%. It's not going to be 150. You're going to buy it at 200,000. So the difference between the period when you bought it and then when you want to buy the remaining share, 50,000 has gone on top. And so that means when you want to buy the remaining share, which is 200,000, it's going to be 200,000, not 150. And the idea of share ownership is just like two of us buying a property together. You have a share of 50, I have a share of 50, but you are the only one living in that property. I'm not living there. So as you are paying your mortgage, which is 150, you still have to be paying me rent. You are making two payments. You are paying me rent because you occupy the whole property. I'm not living there. So share ownership is a kind of last resort for people who are struggling to, maybe one, to raise deposits. Secondly, probably if your income is not enough to get you the property you want. So it's a kind of last resort. It's not something that I will encourage you to do.
Okay. Understood. Thank you.
Thank you, Elizabeth, for that question.
Thank you, Adi. Answered.
Any more questions, please? Feel free. Adi, there are those people who are living in the housing association or council properties.
Yeah.
Does it help to buy benefit them, or doesn't?
For those people living in a housing association or council property, the council give you option to what we call right to buy. Right to buy, I should have mentioned that. Right to buy is you have the right to buy that property, and it's always good to approach your council to apply for the right to buy, because right to buy, they give you a very high discount, which is maybe it could be up to 100,000, and which is very good, and it's a starting point as well for a lot of people. So which is very good. If you have the opportunity to buy your council flat, please go for it, and that will be an opportunity for you, especially when people are struggling to raise the deposit as well. The housing association, they call it right to acquire. So they use the same thing, but you have this different terminology. Council association call it right to acquire. Council call it right to buy. But if you are living in the council property, you have more advantage than the people living in the housing association. Housing association only give you maybe 16% or 10%. So which means you're not gonna get too much from the housing association. But the council, I think they give you more discount than the council tenant. So the council tenant is not help to buy, it's right to buy, you can go for.
Okay. Fantastic. Have you had anyone in housing association or council? There's an opportunity to buy, but those in council housing or houses have a greater advantage because of the percentage available. And you don't require a deposit, I assume.
I have a question.
But housing association is a bit of stingy.
That's right.
Yeah.
I have a question, Pastor George.
Yes, Pastor Joseph, go ahead, please.
Suppose you have a mortgage already, and you would like to make an extension on your house. Which is better? Would you require an additional loan directly, or is better to remortgage? Would you need to remortgage or get an additional loan, a different loan altogether from another company?
Yeah, the two option is available, but the best option will be to remortgage, because when you remortgage, you're going to get a better rate. I mean, if you go to another lender, let's say you are currently with Barclays and you want to go to Santander. So we can now approach Santander with additional, let's say you are owing your current lender 100,000 and you need about 40 or 50K to do the extension. We can easily go to Santander and say, we want to remortgage with you, but we need additional borrowing. So we're going to borrow 150,000 from you, Santander. We're going to pay off what we are owing Barclays, which is 100,000. The remaining 50,000 will be used for the home maintenance. So what you are owing your new lender will be just 150,000, and you're going to be on one single rate with the new lender. But if you go for additional borrowing, it has its own disadvantage. We call it second charge. And when you have a second charge on the property, is like if another company gave you, like I say, let's say you are with Barclays now, and you now approach another lender for additional borrowing, another bank have like second charge on the property. First charge belongs to the company that gave you the mortgage, which is Barclays. That's why they give you a lower rate. If a second bank or another loan company give you additional borrowing, they have what they call second charge, and their rate will be higher. You understand? Because they are taking a high risk rather than the first charge. So it's always good to remortgage and put everything in one basket rather than maybe taking another loan. It's better.
Thank you.
Yeah. I think
was that very clear?
There's a sister there, Rosie. Rosie says I have a question.
Yes, thank you.
Yes.
My question is, are you helping people that would like to have more properties to buy to let, or you only deal with first-time buyers?
Oh, I help everyone.
Oh, okay.
Any form of mortgage, I'm here to help you. First-time buyer, second-time buyer, investors. We have people, I mean, there's a lot to talk about here because we don't have time. You can, apart from the just buy to let, which you can buy with your name, we have a limited company buy to let as well, where you can, if you want to have a portfolio of property, like 10 property, you set up a limited company purposely for properties.
Yes.
And we do buy to let for limited company as well.
Right. And just to double check your company name, you said you are Reina Financial?
Right now, like, you know, I know, maybe if you remember Ian Wright. Right with WRIGHT, Right Now Financial Limited. We have a website. If you go, you see our right now.
Could you please
right
put
now,
your website on the chat?
You can put it on the chat.
Yeah, okay. I will send it on the chat now. So you can go on our website, you see the
website and phone number.
Yeah.
Oh, fantastic.
The phone number might change because we are moving office.
From Pastor Hope.
Our current office is costing us a lot of money. You know, we're in the city. So we are, in the next 2 weeks, we are moving to Bamosi, which is a bit more cheaper. So if you can contact me on the mobile phone, but until when we have a new phone number.
You have your mobile phone number?
Okay, I will just
in the chat.
Thank you. The website now is on the chat if anyone wants to take a picture of it, and then because even if the phone number changes, the address changes, the website will remain the same.
Where is the website?
Isn't it? In the chat. Check in the chat.
Yes. The website will remain the same. It will never change. Yeah.
Yes. Even the mobile number is there. That's good.
The mobile number is always there. That mobile number is over 27 years. And
businessman.
Permanent and pensionable.
Yeah, I don't change my number.
Lovely.
Okay, our time is going. Any more questions, please?
Yeah, I raised my hand.
Oh, I didn't see it. Sorry. Apologies, Rosemary. Yes, go ahead.
Yeah, I wanted to ask, still I'm on the same thing of the 300,000 example.
Yeah.
Of the Help to Buy.
Yeah.
So if I can still get that 20% from the government, even if I was buying too late, still I can get the Help to Buy in order for me to buy that property to let it.
Help to Buy is actually, Help to Buy is purely meant for residential, because what they are trying to say is like, remember the reason why the Help to Buy came into force was during the Cameron regime, when I think that was around 2006, 7, 8, when we have this economic crunch. And just like what is happening now, when a lot of first-time buyers find it difficult to raise deposits. So that is the reason why the Cameron government said, look, let's help the first-time buyer to raise the money to so that they can acquire their own property. Because most of the bank that time, they don't have 5% mortgage, just like what is happening now. And they said deposit start from 15%. So Help to Buy is more of residential, not to buy to let.
Okay. And another thing is, if you don't have any deposit to put down, you could go to another bank and borrow the 15,000 and then go to another bank and deposit it together with the government help. You can still do that.
You know, the one thing about mortgage is that there's something, like I told you, there's something we call affordability. Affordability is a word that is very important in mortgage. And what we mean by affordability, we have to make sure your income can afford what you are buying. And when it comes to affordability, we are looking at all your outgoings before the bank can borrow you money. So for example, Rosemary, you have your income is 40K in a year, and my income as well is 40K in a year. Both of us, the bank can say 40 times 5, they can borrow us up to 200,000. But that is what the standard they can borrow us. But if I have other outgoings, loans, I'm paying another £200 on loan. I have HP, hire purchase car, I'm paying another 250. Like what you just said, you want to borrow 15,000, you will pay another 300. The bank will say, hang on, we might only borrow you 50,000 because you have too much commitment. So one of the things about the mortgage is that if you borrow from another bank to put as a deposit, it will affect how much the bank can borrow you because you are putting more debt on yourself. So bank don't like the idea of you are borrowing money. They expect your mortgage deposit to either come from your savings or from a family gift or something that has not to do with debt. Because if you are borrowing to put down, it will affect how much the bank can borrow you.
Okay.
That's very clear.
Thank you.
Thank you, Rosemary. Any more questions?
I'd like
Yes.
to ask the last. Sorry.
Maureen? Is it Maureen or Elizabeth?
I think
Maureen?
Bright Akora was the first one.
Okay,
Oh,
you can go
I
then.
can't see the hands.
On
When
the
you-
chat, on the
When you
participant.
click on participants,
Yeah.
Okay.
you see them.
Bright had put his hand.
Okay, yeah, his hand has been up. He can go before us.
Okay, Bright. Mr. Akora, are you available?
No, I think that was long before.
Oh,
Okay, he forgot to put his hand when he finished talking.
oh, okay. Maureen, please.
Okay, I've got two questions.
Okay,
Thank
one.
you, Brother Ade, for coming to enlighten us about this. You know, with what happened with the Greenfell, how do you tell that the property you're buying doesn't have this cladding? That's question one. And also, do we get a history of where we are buying? Because like now, you see places, people buy places in flood areas. That really worries as well.
Most of the, after the Greenfell, most of the property now they are building now, they make sure they don't have cladding. So it's one of the things that they make sure it's not happening. And the majority of people property that have got cladding, I think they're making an effort to make sure that they remove it, or they have to be up to the, because most of the lenders have a problem when it comes to cladding, and you might have an issue with a mortgage lender offering you mortgage when it comes to that. One of the things is that most of it apply to high-rise anyway. So most of the property that you high-rise always have that problem of cladding coming in. So what you need to avoid when you want to buy property, except if you are buying from the right to buy, I believe you won't buy your high-rise anyway. But if it's a help to buy, sorry, if it's a right to buy, if it's an high-rise property of up to 13 or upward or 10 floor upward, we need to make sure once you tell us, even if we want to approach any lender, we always ask their valuer to check, because the valuer know much about the history of any property you're buying. I mean, what you need to avoid is, if you are buying a property, except if it's a right to buy, which you are living there, avoid any property. Most of the new builds, which are high-rise, they are all standard. But when they come to old building, avoid high-rise property. Anything over maybe 7th floor upward, we advise you not to go for it.
Okay, thank you, Brother Ade.
Thank you. Sister Elizabeth, was your hand up?
Yes, please.
Okay, it's your turn.
Thank you. My question is a quick one, and it's be worrying me. Most of us, we have a lot of like cars or other things on finance. Does that affect you on when you're a first-time buyer, when you're trying to apply for a mortgage?
Yes, it will affect you because, like I mentioned, affordability. Most of the bank, they don't want you to put too much stress on yourself. So, and because of that, the lender all the lender have something they call it responsible lending. And part of the responsible lending is that they have to make sure you don't have too much debt on yourself. So if you have other loan or something, one of the things that, if you approach me for mortgage now, one of the things I will ask you to get me was your credit report. You need to send that first. So if you send your credit report to me, I will look at it, look at all your debts, everything you have. So if you have too much debt, I will ask you to maybe to wait for a while, to sort out the debt before you apply for mortgage. Even if you are having a credit card, one of the things we always advise our client to avoid is, assuming you have 15,000 credit limit on your credit card, and you spend 14,000 pounds, you only have 1,000 pounds left. The lender might not lend you because they believe you only rely on credit. The lender will say, wow, it seems that you don't have your own savings, because if you are using 15,000 out of 15, you've used 14,000 pounds out of 15,000 credit limit, you only have 1,000 pounds left. So that means you don't have your own money. So what we always advise you when it comes to time you want to get a mortgage is it's always good to use 50% of your credit limit. So if you have 15,000 pounds credit limit, if you use 7,500 out of it, that's very good, because don't use too much when the time when you want to apply for mortgage comes. Don't use too much of your credit card, because it might go against you. And it's one of the things that bring people's credit score down as well, because you see some people, when you check your credit, say, oh, I'm not owing anybody. I'm not having any late payments. I don't have bad credit, but my credit score is too low because you use too much of your credit facility, and the lender will look and say there is possibility of you defaulting when you have too much debt.
Oh, sorry, but 1 minute, they tell us to build up your credit. You got to have credit cards. You got to show that you're paying off. Mm-hmm. So I don't know what mechanism they use, because if I'm paying off, I've used the money, yes, mm-hmm. and you're paying off, and I don't see how it comes into like to say no, so long as you're not defaulting. And you know,
one thing about credit card is that most of the credit card give you the opportunity to, if you use your credit card today, within 30 days, if you pay it back, some credit card don't even charge you any interest on it. You understand? So the idea of building up your credit, when they say you build, I will advise you, if you don't have any credit for yourself, build up your credit, go and get a credit card. But at the same time, it's good, like I would say, okay, use it to buy petrol, pay it back within 30 days. So if you use it, you pay it back on time, not to hang on to too much, or because imagine you have a credit limit of 15,000 and you use almost 14,000. Every month you are paying 400 pounds. Remember, 400 pounds you are paying them. You are not paying that card. You are paying interest, because maybe out of 400 pounds you are paying every month, maybe 50 pounds is just to add up. You are reducing that loan by 50 pounds. Almost 350 is the interest. So, and when you are servicing that kind of interest, one of the worries for any credit card company, when are you going to pay back this money? If you keep on servicing the debt, what the credit card expects you to do, you have a credit card, you use it. If you use 12,000, before the end of maybe in the next 2-3 months, you've paid back, you have the attitude of paying back lump sum. It's not like maybe you keep it for another 1 or 2 years, you only pay interest. Then the way they will look at it is that you don't have your own money, you only rely on the credit. So it's good when anybody says to build up your credit, it's good to have a credit card. But one thing is that when you use it, make sure you pay back. You don't have any outstanding loan. You can have it over maybe 2 months, but make sure at least in the next 2-3 months you cleared it. You use it again, you cleared it, but don't leave it too long.
Okay. Thank you very much for your advice, Brother Ade.
All right.
Thank you. Thank
I
you.
had
Michael, engineer.
Yes, I had a question there. My question was, what is the benefit of buying, if you wanted to get multiple properties, what's the benefit of doing it in a limited company rather than in individual, like as an individual?
When you have a property individual in your individual name, because it's in your name, as I told you earlier, you meant to do what we call self-assessment, which means you need to declare any other income. So on the self-assessment, what they're going to declare there is that you have two sorts of income. You have income from your employment and you have income from other source, either profits from properties or maybe from shares or something. Now, when you have it in your name, at the end of the year, when your accountant is now doing your self-assessment, they will mention that income from employment may be 45,000, right? Now, if you have multiple property in your name, maybe you have another 2-3 property, they will now say profits from property, let's say 10,000. So they will now add 45 plus 10, that bring your income to 55,000. So that brings you to become a higher taxpayer. So which means anything over the normal basic taxpayer, you're going to pay 40% tax on it. So which means you are giving up all your whatever profits you say you make from the property, you are giving it back to the government. But when you have it in a company name, company is an entity of its own. It's separated from you. So the company, we have to do what they call corporation tax. So company will be taxed separately. It's not you that is being taxed. So it's up to you if you want to take money from it or not, you understand? So you don't even, if you have all your company, I mean, one thing I will advise, if you have 1 buy-to-let, 2 buy-to-let, you can keep it in your name, individual name. But if you want to have like 5, 6, 7, then let it be on a limited company name, you understand? So the advantage of having it in a limited company is to save you paying too much tax.
Just to follow up on that, what is the quickest way to create or the best way to create a limited company then for property buying?
What you can do, you can speak to, probably I would say, if you see any accountant, or maybe, because my limited company for property was done by my accountants. And one thing you have to tell whoever is doing it for you, that you said that company is specifically, you are not allowed to use your other company for property. Property, limited company for property is specifically meant for the property, and it must be SPV. You must have what they call SPV code. So specifically it's meant for property. It's not meant for any other thing. You cannot use your company for property. It has to be specifically, because there's a special code for it. So if you speak to an accountant or whoever is going to do it, just tell them that this company is specifically meant for property.
Understood. Thank you a lot, brother.
Perfect.
This is the last
Any more
one.
questions?
Yes, please.
I can't, who is it? I can't see you.
Elizabeth again. Is
Elizabeth again, okay.
Yes. Now this will be a short one, please.
Elizabeth, you have to come.
Please, guys.
You must come to our company, and because at least you ask.
Yes, this is the last one. This is yes. This is not a question. It's a request. Is there any way how you can refer us some developers, because by now you work hand in hand with them, so you know the ones who don't give you a hassle when it comes to finances or to because we've gone to different advisors and or developers, and they send us their own mortgage advisors, and that is the barrier we find there. They will hardly make you go through, or it's a hassle. Even if you tell them that I have my own mortgage advisor, they will not let you, they'll not allocate your place until, or a plot or something, until you go through them. Is there any way how you can advise us to go through that?
No, I mean, part of that is what we do. If you want to buy any property, if you come through us, we're gonna get you the mortgage. The process is very simple. if you find the process of looking for property, we always advise you that we need to get your income first. Once we know through your payslip, once you know how much the bank can borrow you, we will advise you that when you are looking for property, this is the property range you should be looking for, like because some people, because they don't follow the process, some people don't know how much property they should be looking, or how much they can afford. So once we have your payslip and we say, okay, when you are looking for property, don't go over a property of 200 or 250. So if you find those property you are interested in, we can tell you that before you go, or even after you go, we need to get you what we call agreement in principle, because this is one of the things that the estate agent want to make sure, because 20 people can view one property and they don't want people that will waste their time. So you must have agreement in principle in place. In a situation where you've been to the agent and we haven't give you agreement in principle, I just tell them that, look, I've got the agreement in principle for you. They should contact me. Because one thing we are trying to avoid, we don't want to be producing too much agreement in principle for you without you finding the property, because if you don't find a right property, the agreement in principle expired and we have to do it again, and it might affect your credit as well. So like the best process is that if you come to us, we ask you to send all the necessary documents, including your payslip. We now see, okay, this is how much you should be able to afford before you start looking for any property. And the estate agent, they want to make sure, once you show them the agreement in principle, that, look, I've got my agreement principle ready, or my broker has got it, there's no way they cannot force you to use their own advisor or broker.
Oh, okay. Oh, thanks, Brother Ade. That's well clarified.
All right.
Thank you.
Just a quick word, like about, I was searching on helptobuy.gov. It is saying in London they give you 40% equity loan.
You can get up to 40% in London, yeah.
Okay.
For London area, you can get up to 40. Outside London, I think it's limited to 20%. Well, as I said, Help to Buy, if you can avoid it as well, because one of the two things I don't like about Help to Buy, the property, because it's a new property, it's always been overpriced. Secondly, if you, like the example I gave you earlier, you bought a property now for 300,000. The government gave you 20% of that, which is 60. You want to pay back the Help to Buy. That property has worth 400. You have to give them 80,000, which is almost 20,000, which you should have kept, or should have been your own money if you buy the property outright, if it's not Help to Buy. So if it's something you can avoid, I mean, it's not everybody that can avoid it. If you can get your own savings, how we avoid Help to Buy.
Oh, okay.
There is a hand.
Yeah. Should I ask?
Yeah.
Yes.
Brother Ade, my last question, I promise I won't take long.
That's right.
Is that in terms of investment in property, would you, as a property person, advise someone to invest now, this COVID-19, or the time is not right?
Investment is like what we said, is a risk. And to be honest with you, after the first lockdown, everybody have the impression that property would drop and we might be having an issue. But when the government introduced a kind of few incentive, especially stamp duty, holidays, and some people get some money through some other ways, like this bank backs loan or something. So it actually makes people buying. So in the last 3-4 months, we are very busy. We have a lot of people who are trying to buy property, and we are busy for getting people mortgage or something. So at the moment, in the property has not actually gone down at all. It's actually people are still buying. So in terms of buying, I would say is the right time to buy, because but come end of March, what we are not sure, if the government don't extend the stamp duty, only these stamp duty things, probably the rush or the way people are rushing, because you know what, the property or anything form of investment go with demand and supply. If the demand is high, definitely we affect the price. So if people keep on demanding, everybody want to buy, you know, people go outside London now, invest. People go up to Nottinghamshire, buy property. So the rate people are buying now is quite very alarming. So I'm not going to say you should wait. If you have the money, please don't, because you never know. Money is not meant to be kept maybe in a savings account, because on a savings account is, we'll call it emergency fund. You can easily use that money, either somebody wants help or assistance. But once it's in a property, you can easily tell them, sorry, I don't have cash with me. It's already in property. So don't wait too long.
Thank you.
Okay, thank you so much.
It's all right.
There is a hand. There is a hand.
Okay, who? Because I'm not administrator, so can't see the hands.
There is a hand.
Mention the name.
Galax 8.
Galaxy 8.
Yeah.
Diana. Galaxy 8. Joel, can you unmute, please? Joel, unmute. I said the opposite, so you muted. Thank you. Galaxy S8, please.
Galaxy S8 is
Diana.
rather up.
Diana, but she's not active.
There's also Michael.
Diana.
Yakaira.
I asked my question.
Oh, your hand is still up. Sorry.
Yeah, no worries.
On my side, I can't see any hand raised. So we have less than 15 minutes left. So we need to ask all the questions we have before Ade leaves. Mr. Akora, you're back. Do you have a question? Because earlier on we looked for you. You're just clapping hands.
I was just in the washroom. I just wanted to ask, I have a colleague who has just gotten his stay and he has a savings of £50,000.
Yeah.
Does he stand a chance of buying a house?
Oh yeah, if he has got his stay and
limited leave.
He got a limited right to leave or indefinite?
No, limited leave.
Okay. If he got a limited leave to reside, he has a chance of buying a property. One of the things we want to make sure is that how long has he been in the country? If he has been in the, because lender always look at the length of residency. That residency, it doesn't have anything to do with mortgage. It doesn't have anything to do with maybe you are British or non-British. Even if you are British, you've not been residing in the country for 3 years, because residency, you have to be reside here. So they want to see proof that you've been residing. So if he has been residing here for more than 3 years, and another thing is that some lender want to see that he has been employed continuously for maybe over 2 or 3 years. So they might need a P60, and if he's self-employed, they might need the SA 302. And we need to know what kind of limited reside he has got. Is it the one that is highly skilled, or maybe a spouse work visa, which is through marriage? So all those, we need to know which one it belongs, because if you have got...
What I've done is I've taken down your details. I'll give him your number, then you can arrange a meeting.
That's right. That would be great. Thank you.
Okay. Hold on. My wife also has a question for you, members. Hold on.
Hi, everyone.
Hi.
Hi, I just had a quick one. I just wanted to find out, when you're in the process of buying a property and you've exchanged contracts and you're waiting for completion, especially with the new build property, is there a possibility the bank can withdraw their offer? Because you know, my it's happened to my friend. She's got notification. So is there a possibility that after you've gotten that mortgage offer, it can be taken back?
Yes, it's possible. And that's why once you get, and not only a new build, even the normal residential or buy-to-let. So one thing we always advise the client is that once you get your mortgage offer, make sure you maintain your credit history and whatever you do, because some people in between when the mortgage offer is out, if he has any late payment on anything or he has defaulted in something, because each time when your mortgage's offer is there, the bank have the right to still check what you are doing, like if you maintain your credit. So it happened to many people that when they get their mortgage offer and they fail to maintain their credit, the bank can cancel. It happened to someone up to the last minute of about to complete. So we couldn't go further. So, but that client was lucky because the exchange and completion was meant for the same day. If it has happened that they've exchanged before, it will have faced a kind of penalty, because once you exchange contract, you are bound to abide by that contract. So if they withdraw and you've exchanged contract, that person might be liable because he's the one. So it's very important from the time you start your mortgage and the bank has accepted you, make sure you maintain your credit. Don't default it. Don't take on too much debt. Don't take any loan until, if your mortgage is completed today, you can do anything tomorrow.
Okay, that's a good point.
I have a question.
Yeah.
Yes, First Hope.
Okay.
If the bank has given you a provisional mortgage,
yeah,
and you have not taken it up, will it affect your credit?
If they give you a provisional mortgage and you've not taken it up,
yeah.
If you give you a provisional mortgage, definitely what we do when we do AIP, there's a bit of soft search and there's a bit of hard search. So in both ways, soft search might not have much effect on your credit, but if it's a bank that do like hard search, it has effect, because doing a search on your credit is like a bucket full of water. And you go to that bucket, you take one cup, you see that water keep on going down. So each time any lender do a search, the water levels keep on going down.
Okay.
Still, my hand is still up though.
Okay, go ahead.
Yeah. My question was to Ade, what advice would you give to someone if that person has a mortgage and well, they've got some savings? Would you advise that person to buy a second property, or would you advise that person to pay that savings to the current mortgage they own?
Yeah, I mean, one thing is that depend on the age of the person. If someone is having a limited years to work, like maybe going towards your retirement age, and you have a bit of a lot money outstanding on your mortgage, I would choose that it's better to reduce your residential mortgage so that you don't have too much debt on your residential, instead of advising you to go and invest in another property and you don't have any further income coming in. You're going to put yourself in a bit of pressure on your residential. But if you're someone that is younger, you have another 10 years, 15 years to work, then I would rather advise you that because you still have income coming in from your employment or you're self-employed, then it's advisable to invest in another property, because you remember buy to let is not only not just only for investment. It can be a kind of your retirement income. When you retire, it will be a source of income for you at retirement.
Thank you.
Thank you, Ade.
Can I ask?
That's
Pastor
perfect.
George? Yeah. Can I, Pastor George? Yeah.
Yes, go ahead.
Yeah. Ade, one thing I was asking is that you talked of age, but what if you have, like, I've got my daughter here, and if we could want to sell this property to her and she got a good job, is it possible to sell this property to her and then she can get a loan in the bank, buy this property off us, and then we go and buy a property somewhere? Is it possible like that?
It depends. It depends on the kind of property. If you are living in that property now and you want to sell it to your daughter, the lender might be a bit reluctant, because the question is, where are you going to live? Even if you tell the lender that, oh, I'm going back to Africa or I'm moving to another place, they're not going to believe that, because they believe that they don't want you to have interest in that property anymore. And because you are still living there and you are the one selling it, you might have some kind of interest of something on that property. But if it's a buy-to-let property you are selling to your daughter, you don't live there, that's very easy. Even we always do that for a lot of people. You can even give them part of the equity as a deposit, so they don't need to put down any physical cash. I'll give you an example now. Let's say property worth 400,000, and she can take a loan of 300,000. The 100,000 remaining on equity, if you want to give it to her, she can use that as a deposit. So which means we just tell you are giving her equity on that property, which she's going to use as a source of deposit. So in a situation to use your use your residential to transfer it might be a bit issue with the lender, because once you are still living there, they believe you still have interest, and your interest might override their own interest. So the lender might say, no, we're not going to lend. But if you are not living there and there is a proof that you are not living there, you've moved away from there, yes, it's possible.
Thank you.
Thank you, Ade.
Thank you.
Our time is running. I think I should hand over to Pastor Kawa to take us from here because of time. Pastor Kawa, Ade, thank you so much, and everyone who has contributed. We are still going on. We are near finishing, but I hand over to Pastor Kawa now. Thank you.
Thank you very much indeed, Pastor Motirukundo. And thank you very much, Ade, for the wonderful moderation. Thank you for...
thank you.
We clap for him, if you can, please. Yeah.
Thank you.
This forum has been quite interesting, and since we started, I know it took a lot of time, but it's worth it that you have learned. We package it together, other than having the normal Sunday service, that at least you people will benefit and ask questions, and then begin to see 2021, where you are, where you're going, and how you're going to go there. There are a lot of opportunities. You can come use our office. Some of us are consultants. We can help you. We link with these people. That's why we're bringing them in. They helped us to get our property. You can use our office. The office is there. Nobody's using it. We're paying for it, and we are even looking for people to rent it out from us. Use the office. Come to us. We will link you to other people. Apart from this, we are looking at even getting the higher people who are in the higher spectrum in investment, whereby we all link together, and we, as the body of Christ, and then you benefit. Whatever you don't know, let us know. Hallelujah. Thank you very much indeed, Ade.
Okay.
And thank you for also being our friend for a long time.
Thank you.
And
we appreciate your time.
Thank you. I'm attending another meeting now, so I might have to leave you. Thank you.
All right.
Thank you.
Thank you.
God bless.
Thank you very much.
Thank you so much.
Our invitation.
Okay, bye.
Bye.
Thank you.
Okay, then Saints say, I mean, it's been a very fully packaged day, and we're all blessed. The announcement is that tomorrow, the good news is that I'm going to be clocking my birthday and I'm growing younger. I would have loved to take all of you. I would have loved to take all of you to Turkish restaurant that would celebrate together with me. I have already, but because of lockdown, it's very unfortunate. I would love to invest in you people. We go to Turkish restaurant, we packages and enjoy ourselves, but it's very unfortunate. I'm going to be celebrating it with just few of my family here. But thank God, pray for me so that I continue to serve God and continue to grow younger. Another thing is that next Sunday we shall be having a forum, which we are going to have today. Pastor Moti and Pastor Joseph and I and Pastor Hope will be sitting for you to ask questions. Any question you feel you want to ask concerning anything, concerning what you've heard today, concerning ministry, concerning all, name it.
Salvation.
Men and women of God who are very articulate and they have answers. If they don't have answers, we'll refer you. We are enjoying Philadelphian Christian Fellowship. Things are working. And thank you, men and women of God, to come on board and run the program very amicably and precisely. We thank you for coming on board as well. Thank you for those who have come in on the forum for the first time. Bring in your friends, invite others so that we can benefit from what God has destined to have 2021. Over to you, Pastor George Amoti Rukundo, to close the service.
And we sing a happy birthday quickly. Song.
Yes, listen.
I'm happy to listen.
Everyone unmute and sing. Maureen is gonna lead us.
Oh my God.
Maureen.
Okay. Ready? 1, 2, 3.
Yes.
Happy
birthday to you. Happy birthday
to you.
Happy birthday.
Happy
Hip, hip, hooray.
Amen.
More blessings, more blessings.
Hooray.
Hallelujah.
Amen.
Thank
I
you,
hope
everyone.
everyone has been blessed.
Yes.
We are blessed.